What is going on, guys? It is Austin, and for the purpose of a video like this, it's going to be a little easier for me to n not have my webcam on. This shade of blue makes my face look particularly blue, and anyway, but this strategy, or this video, excuse me, I'm gonna delve into a strategy that I kind of developed after, reflecting on 2021 and asking myself questions about you know, my performance and what I could have done better and how I want to trade going forward. That doesn't mean I'm going to abide by this particular strategy all year because it is a quite strict strategy. It's called the RUT strategy for a reason. RUT here is capitalized, but um, it's not like it's capitalized like it's an acronym or anything like that. I just I don't know why it's capitalized, but it is. So, um, if you can think of an acronym, leave it in the comments and I'll consider it. But, it's intended for those who are in a rut, so you can find some security in this strategy. If you feel like you're not trading well, you come to this strategy, and this will kind of help you back on your path, or you can trade on this strategy permanently too. So it's also for beginner traders because you're going to be taking a limited amount of risk per trade, and you're only taking 3 trades per day maximum. Again, only that's a maximum. I took only 2 trades the other day. I can't remember when the last time I only took 2 trades on a day that I traded was. I like to trade, what can I say? But I think less is more. That was a green day for me, and I think less is more in the terms of your P&L. Um, you don't need to be trading all day, guys. You just take 1 or 2 trades and you're done for the day. When you're happy with your profits, you know, you gotta walk away. It's also a good strategy for practicing really firm trading discipline. So, um, you know, that's literally the hardest thing about trading. You gotta you gotta have setup recognition. You gotta in any strategy, you gotta have setup recognition, right? So you gotta have an inkling of which direction the stock's gonna go, or some sort of, you know, you gotta be able to have at least, one reason why you want to buy a stock and or go short, or you gotta have some sort of methodology for what you're doing. And then, second, you gotta have calculated risk, and you got to put money on the table, and you got to calculate where you're going to get out. um, and You got to have discipline, and what discipline means is setting the rules and then sticking to the rules. So if you can't stick to your own if you can't stick to the rules, then you're not trading the strategy. So I challenge you, follow this strategy and then tell me it's not. If you have good setup recognition, tell me that this strategy is not going to work for you. You have to, one, follow the rules. Follow the rules. Then you have to have, good setup recognition. Um, that's it. That's all you need. Follow the rules and have good setup recognition, and I guarantee you'll make money um, with this strategy. It's not the most balls to the wall strategy, but um, it's a strict strategy for when you're in a rut, but it will work. 3 trades max, determine stop based on risk and stick to it. You have to set your stop before you execute. Before you execute, you see your stock, you say, you want to enter right here, and your stop is going to be right here, and then you execute. So a lot of the times you're going to be saying, if we get the break of this level, I'm setting my stop here. I know because where my stop is, and this is 50 cents, I want to take 200 shares because that will give me $100 of risk on this trade. And you know already what your stop is, where you can just set it right when you execute. You set your stop, you have exactly how much money that you're risking, and then the next thing is you want to set your targets too. So you want to do that before you execute. You want to determine your targets 1 and 2. And if this is your first target, you want to cover 50% right there or more, greater than or equal to 50% right here. And then you figure out where your next target is. And you know what? This is where, it's a strict strategy, but there is some creativity. All parameters are set prior to execution. You have to do this stuff prior to execution. But then here's another key. What is not specified by the rules is left up to the trader's discretion. It does not specify what you have to do after your first target is reached. Therefore, you have 50% left. You can do whatever you want. right? You can hold all you want. It could come all the way back down, and then, but guess what? You have to stop out. You know where your stop is, so you have to stop out. It's still going to be a positive trade if you have a positive RR ratio. Okay, now we're getting down in the weeds, but if your first target is further away from your entry than your stop, even if you take 50% out and then lose the other 50%, it will still be a green trade and you will make money on the trade. So you have to have, again, two things. You have to have good setup recognition. I'm just making these acronyms up. Good setup recognition. So that means you got to win on over 50% of your trades. If you win on over 50% of your trades and you follow the rules, you will make money. Holy crap. This is so hard, this drawing tool. Let me practice this. That's better. Look how much money you'll make, guys. So much money. No, I'm just kidding. But I will say, and this is in all honesty, I'm not trying to be like, I developed this strategy and look at me, guys. I developed this strategy and it's so simple, but I I know that this strategy will work. If you win on over 50% and you follow these rules, you will win. But there are a few caveats, right? So no doubling down. When you're in a winning trade, at least then if you add risk, at least you're winning on the trade. But you don't want to double down on a loser. So I just say no doubling down. And if you want variations of this strategy, you can do that too. You can say no doubling down except on winning trades, in which case you add only 50% more risk maximum or 100% more risk maximum. You can change these rules if you want, but these are the rules that I've set for the RUT strategy, and then you can make variations yourself. Or, maybe I'll develop some variations of it as well. And then I've got a little tidbit here that I kind of wrote out. I got a little poetic in here, but, you're not a lone ranging gunslinger on this strategy. You're not out there in the markets like in the old Wild West, you know, shooting from the hip, okay? You are a slave to these rules, okay? These rules control you. You have to do this stuff. If you break these rules, I can't help you, or then you're not. Once you break these rules, it's no longer the RUT strategy. It's something else. It's you are becoming a lone ranging gunslinger, and it can be so tough to stick to the rules. And it's so easy to break the rules. Um, But again, once you execute, there's nothing left to be. Okay, now I'm just covering up the whole screen. You can't even read. Once you execute, there's nothing to be done. Let me zoom in. 150%. That's so much better. I hope you guys could even read before. Once you execute, there's nothing to be done but perform according to the rules. Emotion may have no impact on your performance of these rules. So you have to perform the rules. You are a trader and you are at your desk with your laptop or whatever you've got, and you are acting, you're performing the rules. This is so bad. This is not necessary. Let's skip this. With only 3 trades per day, you must select your trades wisely. You should find yourself passing on trades you otherwise would have taken. Let the ones you do take be the ones you have the most confidence in. So trade A plus setups. I recommend looking for setups that align on multiple time frames, price running into levels of support and resistance, and utterly basic technical formations. Guys, don't get too complicated. Don't you don't need those videos talking about, this or that indicator that are going to make you money. That's all just a bunch of horse crap. But I've talked about that before. Let's, before this gets too long, go to the other tab, the main tab where you've got your action planner here. And this is kind of the main value of this spreadsheet. And this spreadsheet, the link to purchasing the spreadsheet is in the description. I put a $5, guys, $5, and you will get access to this, or you can create your own. I'm not sitting here saying that this is some crazy elaborate, um, spreadsheet that can't be replicated. You by all means can, but if you're lazy and you just want to buy it off me, then great. I just don't want to give, for me to give access to of this spreadsheet for each new person is a little bit of work. So I want like a very small barrier to entry of like $5, and you guys can, you know, purchase it, and then I will give you access to this exact template. What you're seeing here is exactly what you'll get. You get the strategy rules, which are already in the video, so this is just free that I'm just giving out. This is the strategy, and then you will get access to um, this template, which is, I would say, the main value of this of the whole thing. And the idea is, I'll walk you through it. You put in the date, and again, you're doing this pre-market. This is like to put your trade ideas, your whatever you're seeing pre-market, whatever's kind of, ooh, I like that, or this looks like, oh, I think this might happen, or let's see what happens here. This is where all that's taking place. So this is kind of, I think, an appropriate process for a pre-market trade or a day trader to do pre-market. Um, this is kind of the timeline for me, as it goes. So you put the date. One of the first thing I think you've got to do when you wake up and you sit down at your desk in any strategy, you got to know what the overall market's doing, right? Whether it's, you're looking at S&P futures or NASDAQ futures, those are the things I look at. I look at other stuff too, but you want to know what is your market thesis? In other words, what do you think the market's going to do today? Obviously, to get that right and predict that is an impossible game, but it it's important. You should at least have an idea. Be like, I think, you know what, the market's setting up like this, or for macro, or for, what's going on in the news. Have something. What you think the market's going to do. So like yesterday, for instance, I remember I wrote in my version, so this is just a template. I've got my version of this that's filled out. I use this. And I remember yesterday and I went over this in the live stream on Tuesday. And you can see exactly what I wrote and what mine looks like in the live stream that is saved on my YouTube channel. But I remember writing something like, the market either is going to recover to, whatever level I said, 46, what I don't know, or it's going to decisively break trend and move lower. And it did decisively break trend and move lower. And so my thesis actually turned out to be right. And that helped me in my trading for that day. Because if you have a strong thesis that the market's going to go in a certain direction, you want to be looking long or short based off that. So if you think the market's going to have a massive green day and that's what it looks like to you, then look for longs, right? Or if you think the market's going to come down, look for shorts. You should be doing that. You should be aligning your market thesis with your trade ideas, and that's important. So let's just do an example here and say market looks, oops, looks poised for, you know, over 4,600, and I'm referencing like the ES or something. So uh, S&P futures. So it looks poised for over 4,600, whatever that means. So okay, I've got, I think it's going up. You can go into however much detail you want. This is just a template. You guys can do whatever you want. Then you put your plan trade risk. So let's put $100, and this is a drop down. You can put in whatever you want here. Then you get to step one, which is enter values for prospect. So this is where you want to be entering your information for possible trades. So you look in the morning, you sit down at your table, and you go, "Wow, I really like this setup on Peloton." Um, so I really like Peloton, and I like it to go long, and I feel pretty confident about that. But I want to catch a dip on it. I want to catch a dip on it after the open. So again, so I have little notes here in case you forget what these things are. And the whole idea, and again, this is just the template that I created and what I thought about for confidence level. This is CL confidence level. It's just 1, 2, 3. I think it's really simple. I think it's really helpful to just go 1, 2, 3 and be like, confidence level 1. Oops, what happened to my bear with me. Here we go. So confidence level 1 is confident. because you don't want to be you're not taking trades that you're not confident in. Okay, so a 1 is not bad. It's just, it's you're confident. Confidence level 2 is very confident. Confidence level 3 is extremely confident. This is just the way I think of it. It's so simple. Extremely. So you're confident, you're very confident, you're extremely confident at number 3. So, one way to do it is only look, and this is just subjective. So it's whatever it means to you. If you are very confident, that's a 2, about a trade, you could even still say, well, I'm only very confident. I want to be extremely confident. You could only look for threes if that's what you want and be highly selective. And with only 3 trades a day, you're almost doing that. So already. So anyway, this is just up to you and what you want to do and, play it however you want to play that. So and then P or AO, this is just something to keep track of. This could almost be in one of the other sections. This is pre-market or aftermarket. So you want to kind of think about ahead of time. Do you want to execute this? This is referring to execution. Execute pre-market or after the open. That's what AO stands for. Then here's where the fun stuff happens. You put your entry price. I want to buy at $100. I'm going to stop out at 99. My first target is 103 and my second target is 105. So again, this is all according to what you see in the setup in front of you. And this is, I'm just making this stuff up, but you want to be looking at your charts and say that, you like it at $100 and you want to stop out at 99. And so you have to come up with these. This is where your brain becomes important, right? So this just the strategy can only do so much, but you have to have the setup recognition and put these numbers in. But then the beauty of that is in step 2, you get to evaluate the trade before it takes place. You get how many shares you should take. So that's 100, it's $1 of risk. So if you want to your planned trade risk to be $100, then you're taking 100 shares of it. So if I change this to 400, I want $400 of risk per trade. Now all of a sudden the share size bumps up to 400 because $1 on 400 shares is $400 of risk. So there you have that. And again, this is just whatever you want it to be. Say the stop's at 99.33. You can see how the numbers will change. You should take 149 shares, and then your real risk. This number will only change if you change this or if you input your own share size. What if I just go off book and say I want to take, I only want to take 75 shares and risk $50. So that will change your real risk. Then your RUT strat profit. So this is where it will show you how much money you'll make on the trade before you take the trade. Key note here, this calculation assumes that you will take 50% off at the first target and 50% off at the second target. And so it's a very basic calculation. So you're taking 50 off here and 50 off here. And so it's very simple. So you can choose to take profit anywhere after the first target. And so, your profit probably won't come out to be exactly this unless you follow, you know, what that formula is putting out, which is 50% here, 50% off here. So that's where you can be creative as well. As it might hit your first target and then it doesn't hit your second target. It's coming back down. You want to stop out early. You want to claim some more profit. It pops back up. Things happen while you're in a trade, so you can do, you can understand that, and respect that. Risk reward. It'll show your risk reward, and so I have it set to highlight above. It'll show up in green above a 2 RR, so you can. Oops, my headset turned off there. So you can, yeah, you can kind of just see this and be like, okay, this is a really good risk reward. This is a 5.97 risk reward ratio. That's very good. And then this whole section is just pure reflection after the trade. So here you're saying, did you execute the trade? Yes, I executed the trade. Did it reach your first target? Yes. Did it reach your second target? Yes. Did you stop out? No. Rule adherence, yes. And then you put in how much money you made, and then if you take 3 trades a day, you can put in, how much you made on the second trade, how much you made on the third trade, and then it'll put your day net, how much you netted on the day here. And then the last thing you want to say is did oh here, rule adherence. So rule adherence means did you follow the rules on the trade? And again, the rules are right here. Did you follow the rules on the trade? Did you follow the rules on the day? That's very important. You could follow the rules on the trade here and then, not here. Um, and then, this would be a no. uh, or you could even have yes, 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 and then take a fourth trade, and this would become a no as well because you're not allowed to take 4 trades. You're only allowed to take 3. But again, there's variations of this strategy. One very cool variation I thought of this strategy would be you hit your 3 trade limit, but then you could say you're allowed to take more trades. You can take up to 5 trades, but your second 2 trades, trade 4 and 5, have to be confidence level 3 trades. They have to be CL3 trades. And again, that's a subjective measurement, but you should try to standardize kind of what that means. And then you have a notes section here, and that's it. That is the RUT Strategy Action Planner. But in all honesty, I think it's actually pretty cool, and I think it has some value. And anyway, yeah. So let me know what you guys think. The this sheet is linked below, and yeah, consider dropping a $5 on it. If you want access to this, I will give you access to exactly what you saw in this video, and I think it has at least $5 worth of value because I think if you have good setup recognition, you're over 50% win rate. Um, I think, I mean, that is the key for any strategy. It's not just this strategy, any strategy. If you're over 50% win rate, the strategy, it does also matter what the strategy is. But one of the pillars is setup recognition, over 50% win rate, and the other one is having a good strategy. And I think this is a good strategy. So you got to bring the other component to the table, but this I think is valuable. So I hope you guys like it, and yeah, like, subscribe, all that good stuff, and that's all I got for you. All right, bye bye.